Hey guys, it is Julie here with TipRanks. In today's video, we're having a food fight, a stock food fight that is, so let's get into it. Alright guys, welcome back and thank you all so much for being here. Like I said, we're having a stock food fight today on TipRanks where we'll be comparing 3 fast food stocks. We'll take a look at what these companies do and how the analysts are weighing in on their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Alright, let's jump right into these 3 food stocks. The first stock on our list today needs little to no introduction, the famous Golden Arches company, McDonald's. They trade under the ticker MCD and are currently priced at $242.60 per share. The McDonald's stock also pays a dividend. It is a quarterly dividend at $1.38 per share for a yield of 2.16%. The next ex-dividend date is coming up on November 29th for payment on December 14th. Now, we all know McDonald's is a huge global conglomerate. They feed over 68 million people per day at over 38,000 locations and counting. Their strategic plan is accelerating the arches. This focuses on maximizing their marketing with brand and affordability, committing to their core of burger, chicken, and coffee, and doubling down on the 3 Ds. McDonald's has recognized that consumers are increasingly choosing off-premise dining, and they're adapting the McDonald's experience to meet their needs by doubling down on digital delivery and drive-thru. The first of this is their digital foundation. They'll be introducing My McDonald's, a unified suite of compelling offerings that'll provide their customers multiple complimentary reasons to engage with them digitally, whether through mobile ordering, payments, delivery, rewards, or deals. They aim to be the global leader in food delivery and are prioritizing key actions to continue growth with this, including integrating delivery into their global mobile app and defining the future of drive-thru, where they already have 65% of their global restaurants offering a drive-thru. They plan to extend this leadership by continuing to make the customer experience even faster, testing new concepts and technology, and having nearly all of new US and IOM restaurants fully drive-thru enabled. They also recently announced the launch of testing their new plant-based burger, the McPlant. The McPlant features a plant-based patty that was created in partnership with Beyond Meat and is going to be available at 8 different restaurants for a limited time starting in November. The company shared their second quarterly earnings report at the end of July. Their comparable sales increased across all segments on a 2-year basis, and on a 1-year basis, they saw a 40.5% global increase on their sales. Their third quarter earnings report is coming up soon on October 26th, where analysts are forecasting an earnings per share of $2.46. One analyst that just weighed in on the McDonald's stock 2 days ago is John Tower from Wells Fargo. The analyst expects McDonald's will post low teens same-store sales results in the US versus 2019. He expects a greater focus on read-throughs on broader consumer themes, namely labor distribution cost pressures, lower income discretionary spending against changing government benefits and inflation's outsized impact on the lower income consumer, breakfast routines normalizing, and digital engagement post-COVID. He is optimistic that investors will emerge encouraged that McDonald's scale and global sales momentum will give the company significant advantages navigating these challenges and continues to view the stock's near-term risk-reward as attractive. John is one of 24 analysts that currently have a rating on the McDonald's stock, and it does come in as a strong buy based on 21 buy ratings, 3 holds, and 0 sells. The average price target comes out to $268.70, which would be an average upside of 10.7%. And most of the analyst ratings are fairly in line. We have a lot of price targets around that 11% upside, and on the high end, we have a $306 price target, which would be a growth potential of 26%. Second on the list is a company well known for their Frosty and Fries combination, and that is Wendy's. Trading under the ticker WEN, they're priced at $22.22 per share. They also pay a quarterly dividend of 12 cents per share, which works out to a dividend yield of 1.72%. Their last payment was just in September, so we'll be expecting the next to come in about December. Wendy's was founded in 1969 by founder Dave Thomas, who based the premise of their business around the saying that quality is our recipe. They're best known for their square hamburgers made from fresh, never frozen beef. Wendy's now has over 6,700 stores worldwide. The company remains fully committed to their long-term growth initiatives, including focusing on their breakfast offerings, digital acceleration, and expanding their footprint. They recently increased their 2025 global restaurant target up from 8,500 to 9,000. They signed a multi-year commitment with Reef Kitchens to accelerate non-traditional unit growth. They recently launched a new hot and crispy fry guarantee to encourage fans to ditch dud spuds at their competitors. They say that their reinvented hot and crispy fries are a cut above the competition and were preferred nearly 2-to-1 to McDonald's French fries in a national taste test. They say that their new crispy fries are made with real potatoes for improved heat protection and crispiness, perfect for dipping in your favorite Frosty. Their second quarter earnings report came out on August 10th. They saw global sales growth of 22.9%. Their adjusted EBITDA came in at $131 million, and they had an adjusted earnings per share of 27 cents. Their third quarter is coming out on November 9th, where analysts are expecting an earnings per share of 18 cents. Weighing in on the Wendy's stock just yesterday, we have analyst Elton Stump from Loop Capital Markets. His checks of the U.S. company's U.S. franchisees suggest that its same-store sales growth in the third quarter will top expectations. He adds that per his contacts, same-store sales were up 7 to 8% on average during the second half of the third quarter, which was an acceleration from 6 or 7% growth during the first half, which implies a 6% overall comps growth for the third quarter versus the consensus of 4.4%. The Wendy's stock currently has 16 analyst ratings and does come in as a moderate buy based on 11 buy ratings and 5 holds. Their average price target comes in at $27.37, which would be an average upside of 23%, coming in higher than the McDonald's average upside. Once again, we have our analyst ratings fairly closely grouped together, a lot of them ranging in that 17 to 26% upside range. Our highest price target does come from Alton with a $31 price target, which would be an upside of nearly 40%. Now, last but not least, we have a bit of an underdog in our food fight here today. That is Del Taco Restaurants. They trade under the ticker TACO, T-A-C-O, currently priced at $8.69 per share. The company has a market cap of just $316 million. They also pay a fairly new dividend at just 4 cents per share for a yield of 1.28%. The last was just paid in August, so again, we'll be expecting the next one here in the winter. Now, Del Taco did get its start back in the 1960s, but has a much smaller footprint than McDonald's or Wendy's, with approximately 600 restaurants currently open. But they are growing, and they say they've built a loyal fan base because of their commitment to serving high-quality food made with freshly prepared ingredients at unbelievable prices. They are a regional icon on the West Coast and the number 2 Mexican QSR or quick service restaurant concept in the US, second only to Taco Bell. They have a core drive-through strength and fully deployed delivery, working with companies like DoorDash, Postmates, and Uber Eats. They also have a mobile ordering and payment app, allowing drive-through, takeout, delivery ordering all in one. Del Taco just reported their third quarter earnings report on October 14th. Some highlights included that they signed 7 franchise development agreements year to date for 53 new Del Taco restaurants from coast to coast. They also launched a new multi-experience and multi-tiered Del Yeah Rewards app. Looking at the numbers, they did have modest growth. They had system-wide comparable restaurant sales increase 1.8%. Their total revenues came in at $124.3 million, which represented nearly 3% growth, and their company-operated restaurant sales of $112 million represented 2.2% growth. The Del Taco restaurant only has 2 analyst ratings, and it does come in as a moderate buy as we are split between 1 buy and 1 hold. Both of these analyst price targets were reiterated yesterday following the earnings report. The average price target comes out to $13.50, which would be our highest upside today of 55%. Even the hold rating comes in with an upside of 38%, and our buy rating comes in with an upside of 72%. So there are 3 fast food restaurants, all coming in with some double-digit upside potential from analysts. Of course, you guys know I always love hearing from you. So let me know your thoughts in the comments down below on these 3 fast food stocks and what other fast food stocks or food stocks in general out there have caught your eye lately. As always, please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I'll see you back here next time.